Good afternoon, everyone, and welcome to the PivotBoss Trading Room. I am Frank Ochoa, also known as PivotBoss, and I wrote a book called Secrets of a PivotBoss. And thank you for joining me today. This is the monthly outlook for September 2018, and we have quite a bit to get to. Awesome. Great that you can hear me. Thank you all for being here. I wanted to start off number one with crude oil. Crude oil has the most significant rejection day that we've seen in quite a long time. Crude oil has had it's had a nice little rally here lately, but I think it's had a much easier time going down here recently. The waves lower have been much more significant. The rallies have been, it's basically been laboring to try and push a little bit higher. Today, though, price above the 71s, seeing some sort of hold above that level for a little while at least in pre-market trading, and then once the 71s gave out, which was right at the open basically, it was basically just an open drive down, just a steady sell-off throughout the session, taking out two-day lows, rejecting the previous month's high, and this all happening right at the 70-71 level, which is resistance. So we've talked about this over the last week or so, in that price has a shot to get back toward this zone here, but at the same time, this is the area that has been offered time and time again. How was it going to respond this time? First day of the new month of trading, and we got a significant rejection day. Again, in the trading room, what we did was quantify what this day looks like here, and basically the range from high to low is $2.32, and that is basically 208% of average. It's been averaging about $1.26 per day or so, and anytime you get something significant like that, I mean, it's a big move. And so anytime you get that at an edge, there's a high odds chance that it rotates to the opposite end. So I'm looking for price to perhaps drop into last month's low. So this could be an outside month where this month's high is above last month's high, that white line, and we drive down and push through last month's low to create an outside month. So with this one, what I'm looking for here is for a pullback in the upcoming day. And any pullback, anything above 70 and perhaps as high as 70.5 or so, could be a great opportunity to sell, to defend and build a position for a shot at pushing price back down. Now, this position here could build out over the next day or 1 to 3 days, and then eventually we could be looking at a push downward over the next week or so. So I would say 7 to 10 days out, 5 to 7 days out, something like that, we could be back to 67.55. And that would be your first major target, 67.45, call it. Not only is it the August FOMC key level, which has been very important, off of it, down below it, resistance, back up. Rejection here tells me it likely comes back to that level, but also it is the midpoint. That purple line right there, that magenta line, is the midpoint of the previous month's range. And so if you're going to reject the edge, oftentimes you come back to the midpoint. So I'll be looking to defend prices above 70 and as high as 70.5 or so for a shot at dropping this thing into 67.45, and from there perhaps looking to see how this thing progresses for a shot at continuing this thing downward across the range towards 64.30. So that's crude oil right now. I think with crude oil, what we're looking for is further development within this larger range on a longer term basis. And again, whenever that range is done building out, we could see significant expansion after that. Here, let's do this here for George. So again, you can see that we've had a significant rally from 42s on up to 75, big time move. Now we have this range that is built out from here to here, boop, 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 boop. And eventually we're going to get a move outside that range. Is it below 64 to the next level down, or does it hold here and try to push higher? I don't know which way it's going to go, but overall it's been going this way. I think right now, at the very least, we have a play back to this line here on the short term and a shot as low as this. Beyond that, who knows what happens here. But I do know that once you get down to this edge here, bulls will become very, very interested, and that's when it could be a play right back up. So that's how I'm looking at engaging crude oil here to begin the month of September, looking to sell it for a pushback to the August midpoint and perhaps to the August low. And then should price drop as low as 62.75s, anything below 63.50, that could be an opportunity to look to defend or watch for rejections back for a return back to 69s. All right, let's see here. The other one I wanted to talk about here is Apple. Now, Apple came from last month's market outlook. This is probably one of the best ones we've had in a while in terms of a wire-to-wire winner. The first day of the month was August 1st. And you can see that's when earnings came out, right? Earnings came out the day before, so the next morning we get a huge gap up. A huge gap, right? And I mentioned in the trading room when price was around 199, 199.50 or so, I said buying the 195, in the money 195, or buying the at the money 200. And then holding it until the very end of the month is likely going to be a huge move. It's going to be a wire-to-wire runner. The reason I thought that, and you can go back to the monthly outlook from last month, the recording, to see more about why I thought that that would be the case. But a great push on earnings, a great gap, a good push through the 195s, left behind a strong LVN. Narrow pivot range as well. Look how narrow the pivot range is here for the month compared to all of these going back. All of those things suggested that we were going to have a wire-to-wire winner. And you can see here this thing rallied significantly to the end. And the idea again was the 195 in the money calls could be great. And by the time it was all said and done, I think those were worth $34, $38 on those calls. So it was a huge move when before they were probably $450 or something like that. So just a significant rally out of this one. It is now at a point where obviously this one's the first one to hit $1 trillion market cap. Amazon just hit it and is also the second now to hit $1 trillion market cap. This one is very well known now that Warren Buffett has been buying more of this one. I think it's very evident on this breakout. That's the move right there, and it's going to be very difficult for me seeing this thing break back below 195s in the longer term. I think that's a major market structure level now, the 195 level. You know, even before the 180 level is market structure, the 150. And so it just continues to rally significantly. It's going to take some sort of pullback, though, I think, before we can get another big continuation. And that pullback may not come all in the form of like a big drop. It may be mostly sideways to down, and by the time you're looking at it, it took 3 weeks to go about here, and then it's ready to go again. So I think this one could be at the tail end of a big move that could eventually lead to some sort of compression, digestion of the recent move, and then a continuation. So you see right here where it was very narrow, that pivot range, and on this breakout, to me that suggested a high range rally throughout the rest of the month. Now this is the opposite. You have a wide-ranging pivot range. That wide-ranging pivot range suggests that you're about to see sideways movement or compression, whereas this narrow range suggests breakout and expansion. And so, again, while I am still bullish, very bullish Apple, I still think this one has, more upside. It just continues to do well. Even though I've had problems on my end with the software updates, has been rendering lots of my hardware useless at times, and that's been frustrating. It doesn't matter. This thing continues to make money. And so I think that any major pullback toward 200 could be a longer-term buy opportunity. But I think right now we might be more sideways to up at the moment. I just don't see this thing just running off some more like this. I think at some point we get some sort of sideways to down before we continue higher. So that's the longer term view for Apple, but a great buy recommendation last month for the monthly market outlook. Hopefully we find a few more candidates like that here again today. One of those could be CTSH, this one right here, CTSH. This is a good candidate to watch right here. It's holding right on major support, 74 bucks, great support level. You can see today a great rejection tail, a signal down here. We got a major gap down. This one gaps down huge, and then formed a rejection after taking out last month's low. It took out the low from May. It took out the low from February. It took out every single low and then closed much higher. 75 is the absorption point on the intraday time frame. Again, much like crude oil, I would say watch CTSH for a pullback to the midpoint here around 75 tomorrow or over the next 1 to 3 days. That could be an opportunity to build a position here for a shot at filling the gap back towards 78.5 and perhaps making a run at filling the gap at 82s over time. I don't think this is one that gets to 82 anytime over the next month. As a matter of fact, if you quantify average monthly range over the last 10 months and project it higher from today's low, this is your high probability target. So over the next month of trading, if this remains the low, if this low remains intact, there's a good shot we get somewhere between 78.80 and 80.4. So the idea here is one of two ideas. If this is 75s right here, and I'm thinking that a pullback to 75s provides an entry over the next 1 to 3 days for a move over 2 to 3 weeks, right? 2 to 3 weeks into that target. You could go at the money 75 long call, but right now I think there's a better opportunity to go in the money 70 delta or close to that 45 days out to the October expiration. That would give us 72.5 as the strike right now. So 72.5 would be the aggressive in the money option, which is my favorite approach to trading off of this LVN. When there's a major LVN and major rejection, I like being in the money below it as this thing pushes higher, and this is the case now. 72.5 would be that idea. The other idea, last idea, would be a 75 to 80 spread. So you can buy the 75 call, sell the 80 call, and that's your 5 handle spread. Again, the entry would be a rotation into the midpoint tomorrow or anytime over the next 1 to 3 days. So those are a few ideas for CTSH. Now, keep in mind, this trade basically remains intact as long as price can continue to close above 75. 74 really, but 75 is kind of the early litmus test there. But you really haven't seen many closes below 75 before it pops right back up. So again, this is a good opportunity to watch for the month ahead for a push back towards 78 to 80. Here's one that I mentioned in our trading room. We've been talking about this one for a while. This one's called EGAN. This one has earnings coming up on the 6th after the market closes. So in 2 days we'll get earnings on this one, and for the most part this one has been a strong mover to the upside. It's one that has gone from $2 to $19 very quickly. It's had a great market structure to the upside. This right here is a great impulse sell-off that's given us a nice key range, and that key range gives us reliable targets to trade toward. 26 is the next major upside target on this one. Depending on how earnings goes in a couple of days, we could be well on our way to working toward 26. Say earnings are received well and price were to open up, say above 16 or so, that could provide a gap and run situation where 26 could be a very quick target. I would think that even if price were to drop on earnings as low as $11 or so, I think that would be even the better opportunity to trap below the 12.15 key range low and then return price from 11 to 12 up to say 22 to 24, and that's a good double in this price. Now that would take somewhere between 4 and 6 months at least to try and play out, but it could be quicker. So this is a longer term candidate here. This is one that's on our growth watch list here. This is also one that if you were to buy 11, 12 bucks and you just hold it for the next 1, 2, 3 years, it's in one of those spaces that just continues to grow. So this is one that could have not only short-term benefits but medium and longer-term benefits as well. So keep an eye on EGAN. I wanted to go through a few scans with you as well, some live scans. So what I'm going to do is bring up the wick reversal scan here. This is going to show us any of these rejection tails right here if they pass our criteria. So what I'm looking for usually in this chart, I'm looking for these tails to occur at major edges, at LVNs, below value, those types of things, failed new lows. All those things provide an opportunity to buy in after something like that for a return to value. Like this happened at the previous month's low, rejecting back up. This could be a quick play back toward value. Right now, last price 42.82, value is 47.39. It's a pretty good little shot right there to get that one up. Not my favorite, but you can definitely see it has potential. This one here is Cloudera, and it's a newer stock here. You can see it IPO'd a little bit back here. Let me see here. Now this one has been a little bit lower here lately. It has been below value, which is the 1346 level here. And every time it's gotten below there, you see it pop back up, and it's had a pretty good compression phase here. You can see the moving averages are pushing up after the recent squeeze. You can see a multiple day failed new low here. Market structure level at 15. This one looks like it has a shot to really go. You can see right here, this is earnings here. And right now, after earnings, we got... No, this is earnings tomorrow. Okay, so tomorrow, so it hasn't come out just yet. So earnings are tomorrow after the market. This is one to watch here because this type of behavior usually suggests a rally. It is what I would call a change of bias. So you can see right here we have a lower value relationship where this pink line, right, is above the next one, which is above the next one, and then this month it's above it. So it broke the downtrend cycle and is now higher value. So to pull back into that zone offers an opportunity to buy for a push higher, and then the next month could be another buying opportunity as this thing starts to stair step higher. So this one is a good opportunity to watch on a short-term basis for a return back to 17 and 17.30. You know, that's recent highs. You would fill a gap, you'd get back to value. Right now we're trading 15s. Again, there is earnings coming out in a day or so, but this could be a candidate that sees some nice strength out of here. So keep an eye on that one. Okay. Here's another one, CNDT. Now, for those of you that know my style of trading, I'm not really fond at buying at highs up here. This isn't really a real rejection. We haven't really tested the 8 period. This is clearly a very strong stock ever since earnings came out. It's been vertical, kind of like Apple was. Not really a buying opportunity, even though there has a sell signal there. This one's retesting 21, major LVN. This one kind of reminds me of one recently that really popped up pretty strong in about 2 days. Great LVN there. Let's see what else we have. CTSH, we've already know about that one. ETN looks like it might pop as well. FTV, higher value relationship. Goldman Sachs is one that we have as well as one to watch. With Goldman Sachs, this is one where we have a long-term range that has developed. This range has been in place since the end of April and has mostly gone sideways since that day. It's gone downward as well, but it's stopped making new lows and started making higher lows, and it also started making higher highs. When it comes down to it, this looks like a rounded bottom type of pattern. We're on the pullback phase of that pattern, right at a higher value relationship. At the very least, we could be looking at a 255 to 257 move with a shot at going across the range to 270 to 275 over the course of the next 3 or 4 months or so. So this one is one to keep an eye on. With this idea, you don't want price really closing back below 232.5. That's kind of the mid pivot here that it needs to stay above in order for this thing to continue chugging higher. So this is one to keep in mind as well. GS. Hertz is rejecting the $17 level. That's been a solid level. I traded that one here last time off the midpoint back up. It's doing the same rejection again and could be headed back to 17, from 17 to 21 yet again. So this one's been really good in terms of market structure. It recently popped higher and came back down. Nice little rejection, could take us right back to 21s in this one. So that one right there is HTZ. So again, that one is 17 to 21 type of play. In this case, you really want price to stay above 17s, but especially above the midpoint of the rejection day, which is 1736. This one looks like it's ready to pop as well. Looks a little thin. Clack. Liberty Global's at 25. That's a major long-term level. Major long-term level. That's going to be very interesting to see how that one plays out. Just going to run through the rest of this list. I do also want to look at some longer-term futures as well, some other ones that we hadn't gotten to yet. So let's take a look in a moment. '52s and MGA looking pretty strong here. I looked at it before over here, and it was a pretty good move, but failed, and it's been a little wonky. So it could still see a bounce, but let's see what else we have. OMC is not bad. This one looks like it might get going. Here is AT&T. AT&T is holding the 31.5 key level. 31.5 has been a big time level for a long time. You can see it's been support over the last 5 years. If you look at the weekly chart, before that it was resistance for a number of years and then has been support for a number of years. And only recently did we drop below that level here, and that was late July. And then we bounced back up and came back. Here's a rejection day that's developing. It's developing at the previous month's low. This one looks like a great opportunity to bounce back toward recent highs, which would take you, say, 33.50, but also perhaps as high as value, 34.61. This gray line right here is the bottom of value, and that's kind of where we are now. So you'd be buying below value for a shot at returning to value. You can see all of this super thin over the last 5 years. This is some of the best pricing to buy AT&T, over the last 5 years. So again, where might we go with this one? I think at the very least we have a shot to fill this gap and retry somewhere around 33.50. At the best, I think this thing can come up here and fill this gap and get to about 34.5. So this one again has a good shot to go higher. With this 31.5 being such a great level, again, I would probably do something like an in the money 70 delta. 70 delta, that's probably a good way to go, because I believe that 31.5 will remain intact. And if it doesn't, it doesn't. But at the same time, that's an LVN that has been pretty solid here lately. It got below it here. Now it appears that they want to absorb off that level again. So over time, I think this has a great shot to get as high as 39, but that might be, say, 4 to 6 months from now. So AT&T, a good one here to watch from a short and long-term perspective. Okay. Now I wanted to take a look here. I know XLF was one that was asked about. I was watching this one before. I think we're on the verge of this one. And you know what? Instead of looking at it over here in, you can see my key range, right? That's my key range. 26.5 has been my major area to defend. It's already bounced back. It wasn't easy down here. The first one was easy here. This one was a lot messier and eventually got higher. But if it were to break to the upside, 33.5 could be a long-term target. 33.5 based off of this key range. I think that could be underselling it, because the sideways action here has been 9 months long. 9 months long, which means when this thing starts going, it could be about a 9-month rally. You know, we might have something much higher than 33.5. It could be 37.5, something like that. So if we look at, let's look at this view over here. We'll go XLF. This is something I wanted to show you here. This is my XLF chart in Visual Trader. Let me add a little more history here. One thing you'll notice with this one is I have my PivotBoss bands on here. These bands are pinching significantly on this side of the chart. That pinching of the bands is usually indicative of expansion to come. We haven't seen expansion just yet, but we've seen, you know, volatility be from here to here, and that's where it was. And then here recently it has shrunk to here, and now we see just this bit. That right there, that pinching of the bands, is very, very important, and usually will trigger some sort of expansive type of move. And then that's going to be a move where price is going to be sitting outside of R3. R3 is going to start climbing, and then price will start to ride this thing higher like this. So on a longer term perspective, this one is coiling up significantly and has the potential to really go. If you look at it in, say, a weekly chart right here, you can kind of see how compressed that price action is, and we're getting very close. So I think just from a purely longer term perspective, XLF I think has a really good shot to break out. Now, does that mean we do that now? Or is that going to happen after the next major pullback? You know, at the moment, price is seeing rejection off of R3, and usually that would open up a return back toward value. If price were to push through that zone, then we might start a price discovery phase. So I think this one's good for a major expansive move ahead. Do we bounce right now and start to try and break out now, or do we pull back a little bit first and then try off of this low? So I don't know in terms of timing on this one, but I do think that, say, 6 to 9 months down the road, we're much higher, because this thing has rallied through these highs. 26 needs to remain intact, so we'll keep an eye on that one. EEM is one as well. Let me pop up this chart over here. This is the emerging market ETF. This one, if you look at the weekly chart, had topped out at the upper end of the range, and that was right here. You can see when it got up here the first time, kind of a head and shoulder and drop, and then when it gets over here again, another type of head and shoulder type of pattern and drop, each time coming back toward value. Every time it gets a little overextended to the upside, it comes right back to 41.46 on a longer term basis. 46 is important here, and so is 34. Everything outside of that is just kind of outside of that. And so breaking back below 46, You know, again, if this one can't get back above 46 here soon, I think there's a good shot that we try to make a move back to the bottom edge of value. You know, top value, now we're below it and touched value. I think we maybe work down toward value before coming back up. So that's EEM in terms of longer term idea, just based on market structure. You can also see the downward channel remains intact, and I always say, you know, you got to just go with what the market's showing you until proven otherwise. And it keeps showing us down. It keeps showing us down. Every pullback is down. So until proven otherwise, this one could be headed much lower here. Let's see. You also had AMD. We talked about this one in the trading room today. This one's been a huge mover, 11.5% up today alone. It's gone from 15.5 to 28 bucks just in the last month alone since earnings came out and the thing just ran. That's been a huge, huge mover. It hasn't stopped. What I mentioned in the trading room this afternoon, or perhaps this morning, whenever it was that, you know, this one right here is number 2 behind NVIDIA. And NVIDIA has been such a powerhouse and continuing higher. And NVIDIA, for those of you who know about NVIDIA, is up to 280 plus bucks, 283 bucks, right? And they are the leader in this space with the chips that are being used in today's market, right? But if you look back, just 3.5 years ago, it was 18 bucks, and now it's $283. AMD right now is trading $28. Will it also be $280 in 3.5 years? They are doing really well with what they're producing. Their chips are great. They've gone from 2 bucks to 28 bucks under the leadership of the new CEO over the last 2.5 years. It's pretty solid. So the point about this one is I think the long-term story is great. This is one of those long-term ideas that you want to buy pullbacks at the most opportune times. I don't think it's a great buy at this point because it's just through the roof. But I thought that Friday, and it's up 12% today. So it's hard to buy when it's running through these highs like that, but sometimes you get left behind if you don't scale in somehow. I'm just going to see if this thing can pull back, because one thing I do know is market structure wise, when you do something like this in the chart, you know, where you just run through and trade through all of this very, very quickly, you know, it doesn't stay like that forever. At some point it has to come down there, retrade, properly auction that zone, and now we go higher, creating an LVN of some sort. So I do think that perhaps anything, if you're able to get anything around 20 to 21 for a longer term type of idea, that could be a great, great long term in. So this one right here, again, very, very strong. Nothing stopping it. We had it long in the room on this day when it popped up on earnings. Accumulation from 930. The idea was that we would likely get to 15 bucks lickety split. And since then, it broke through 15 bucks and has just continued higher. So this one has been on fire ever since we had it as a long, around 10 bucks, 11 bucks. And it continues to do well. So we'll see how this one continues to progress, but I think any pullback could be a longer term buy opportunity. Yes, you're right. On a longer term chart, those levels have been traded. Absolutely. That's a very good point. But you have to go back quite a bit. This is the 10-year chart, and we haven't been there. So I imagine there's some traders that if you have to go back more than 10 years ago, they were probably in middle school. So they don't remember that. So yeah, you're right. It definitely has traded it at some point a long time ago. Nice little move, though. What a great, great move on that one. Square is another one that looks just like AMD, only better. This one has also been a screamer to the upside. The last time I had it as a buy was down here, and I was only forecasting 75 to 79, right? This target. And this thing is blown through there in the last week alone, reaching 91.25 today as a closing price, up 3%. Huge move. You can see a lot of my analysis on this one goes back a couple of years ago when we were over here, and this was the norm. And I remember marking this one off, saying, wow, this thing just continues to push higher. This looks like a great growth stock, and all of a sudden, you know, here we are, 90 bucks 2 years later, not even. So that shows you how strong you know, the market has been for some of these stocks that have really come in and grew nicely. This is one of those ones, again, that I think it should be part of core long-term holdings. Anytime you get major pullbacks, and major pullbacks looking like this, right, like that, like this, those major corrections are great times to add back or enter in. But again, this one's been difficult to get an entry in ever since the last pullback. That was on earnings. Market structure wise, I think 75 is a great level. I think if you get back to 75, that could be your double point. You know, you look up a year and a half from now or something, it might be at 150. At its pace right now, it might be 150 by Christmas. I mean, that's a joke right there, but that's how fast it's been going, right? And this thing is at 90 already. So again, if this thing were to pull back, and I think if anything in the 75 would be a gift, we may never get that. So this one has been very strong. I think the next pullback remains a great buying opportunity. This is one of our long-term growth stocks that's been on our list. And we've had others like that as well. Here's Roku. Roku was one that we had long. Our April market outlook, I mentioned that we're right at 30 here, and this could be a great buy opportunity. And at 30, you know, I got in here as well. I got into multiple trades here. And at the time, we were looking for a move over the long term of a move from 30 to 52. And there was multiple trades along the way, including here and here, here, all over here on this day, on that day. And it's just continued higher. This one has been strong, and I think 52 is the next market structure level there. That is the big level. If you were to see 52 in Roku anytime down the road, that might be a lucky buy, because you could be doubling down the road again. It's already went from 30 to 60. It might go from 52 to 100 plus here down the road. So this one's been very strong. It is up against the Amazon effect. Amazon coming out saying that they're going to be challenging Roku's space, and I was very impressed with the response that Roku had. I mean, it was obviously down, but did not just surrender like some of these other stock charts have. It was actually quite bullish. So that shows the resolve of a stock like this. I think it's very strong. 52 is a long-term buy, very similar to some of these others that you've marked out here, like AMD and Square. Great stocks there. GAIN could be one of those as well that's just getting started. Now, I wanted to change the tide from stocks for a moment over to futures and some of these other markets, because we have some energy situation, because obviously crude oil is down big, or has a major rejection day, but wasn't down big, sorry. Had a major rejection day, but was only down 0.6. Meanwhile, nat gas, this was down 3.5%. 3.5%, a gap down and run through all the stops. This looks serious. This looks like it's heading back to 272 or so, the recent support lows. A pullback into, say, 286, 2865, somewhere in that zone, could be an opportunity to send this thing much lower in the week or two to come. That could be an aggressive test down here at these lows pretty soon. So that's nat gas. If you look at something like RB, for example, again, not a big day in terms of the amount it was down. It was down less than 0.5%. But in terms of the size of the range of the day, in terms of how far that thing sold off after those highs, that's a pretty significant move. You see the failed, it was a breakout stop run day to the upside, rejected 2-day highs and dropped. That's an outside sell reversal right there. And as you know from my book, second chapter of my book, the outside reversal, very, very bearish pattern. In this case, what we talked about in the trading room today is that if this is a rejection here off this lower value relationship, if this rejection remains true, this thing could be looking at much more weakness. 202 could be a great entry for a shot at 177 in this case. It could get as low as value 161 or maybe the 165 support low, but I think a high odds target puts you at 177. Now, to quantify this, because again, those are feelings. Feelings don't make money all the time in the market, right? So I like to quantify things, and I want to look at the data, look at the stats, and just look at the odds based off of that. And then I base my ideas and base my trades off of the odds. What's the odds of the likelihood of that thing happening? And in this case, from that rejection high, the average move over the course of a month would put you right here at 1868. So that would be the high probability target zone here, 191 to 186 for the next month. But remember, whenever a market's coiled up like this, the energy can be even more than that. So 177 could be somewhere in the 4 to 6 week range out. So we'll see how that plays out. But that one's pretty significant. You also see heating oil as well. This one was up on the day. It was up 0.25%, but look at the rejection and look at where that happened. Again, I'm really big about rejections. Rejection days are significant. This is a rejection day. Look at where it happened. It happened off of these highs right here, right? This is your key range, and it happened at the 50% expansion level, which is perfect. That's a pretty strong move. The other thing is it rejected prices above last month's high, and it's sitting right at last month's close. Again, what I mentioned in our trading room is if price comes up to about 227, you don't want price to close above this level now on a daily basis. You want it to close below it. Any pullback into that zone could be a selling opportunity to build a position over the next 1 to 3 days for a shot at dropping this thing into the high probability target zone. That would be about 214 in terms of this key edge and the tightly coiled price action here, which led to the breakout. So you're coming back to the point of origin. Additionally, that's your high probability target zone, 212 up to 216 in terms of average range. So this heating oil right here, significant. You can put that one alongside crude oil as well. That crude oil rejection is significant. The heating oil rejection is just as significant. And again, energy right now, energy futures looking fairly weak. Crude oil, heating oil, RB right here, and then you have nat gas down 3.5% as well. Metals took a hit today, like copper. For example, this one was down 2.7. Here's platinum. This one's down $1.16, or sorry, 1.16%. Look at this failed new low right here and popping up. It's like the laziest attempt by the bulls to defend down here. If you look at gold, it's very similar. It's a very lazy attempt to defend. And again, I'm not very high on gold right now. I had been every single move we nailed until this thing just stopped moving. Until about right here is where things got a little hairy. Right here where you knew if it was failing. Right here when it wasn't moving. And then it just became directional to the downside. So since then, it just really hasn't found footing. So with gold, I feel like this high to this low is a great impulse range. And right now, we're building out in that range, and it could be a while. And eventually, it'll build enough energy to perhaps return price to value. Or perhaps we need to retest those lows or something like that. But I think right now, I think it's still developing. I think it's still building energy. So I'm going to give it some more time. I'm looking for the right opportunity to bounce this thing back toward value. But I don't want to fall in love with that idea if this thing can't hold 1190. So 1190 is the key level there. I wanted to talk a little bit about IYT. IYT right here. This one I've been talking about as a longer term idea. We talk about this one as being sometimes a leader in the market, right? If this one starts going down, it's probably going to lead the market by, a day or two, or whatever the thing might be. And we've seen that plenty ever since this move here, because I'd look at IYT every once in a while, but you really haven't needed it a whole lot over the last 9 years. It seems like the market's just been doing this, and then it went sideways, 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 and then it goes up. This is the first time we got hit with a major reaction, a counter trend reaction, a major selling spree had happened, and it happened very aggressively, very quickly, and it hit the broader market. Once that happened, I thought, you know what, it's time to really turn to IYT, and maybe it'll give us some very good near-term turning points. Some of the most recent ones were this one here, turning it down off of that FOMC key level here, that one turning it down, this one turning it back up, this one holding above these highs and failing, told us we could expect this. This rejection here, while not as low, we were looking for price eventually to return to that blue line, and eventually it happened off of this move up. This was another buying opportunity. That was our most recent idea to buy this one. Was that failed new low right here. On that failed new low, it broke 3-day lows and then popped up for 4 days up. That was a great leader as well. So what is it telling us now? You can see here that we are above those highs. So if I bring this over here, this is basically the beginning of the year, and this 202 level is very important, and we got above it one time to begin the year, failed, retested, and dropped. We got close to it over here, dropped. We got over here, dropped, and then that failed new low pushed us through it, and now here we are with another box just like that box. Additionally, we also see that we have a failed new high here. That market right there, rejecting highs. So here's a high, pulls back, failed again, pulls back, failed again, and here we are. Additionally, if you look at the midpoint being observed and honored here today, this looks like if it were to break back below 202, how much of a drop do we see? Do we get another one of these? Or is it something more modest? Because I'm okay if this thing just comes back to, say, 194.5 or maybe 197. All right? It doesn't all have to come all the way over here, but the door is open for that type of move if price cannot hold 202. So 202 is the one to watch here in IYT. Again, if this one's going to lead the market, any failure through that level could be significant and could be a quick move, I would say, to about 194.5. If it's going to reach this level, it might mess around and then get there. But it doesn't necessarily have to. We've seen this thing go down very quickly off that zone before. So the other thing I wanted to show in IYT is the longer term chart. Here's IYT. And what I want to show here specifically is with the bands on the weekly time frame. So you can see here this thing, has been trending up. Look at this right here. On this chart, this is a weekly chart of IYT. Each one of these is a weekly bar. And price has been trending up the whole time. And now, just recently here, we've seen price come back to R3. This is value. That's VWAP, right? Volume weighted average price. And that's composite VWAP over the last year almost, since October. So it's a long-term VWAP. Price gets outside of R3 here and fails to hold it here and drops all the way back to S1. Chops around VWAP for a long time with flat bands, and here recently gets to R3. Now, if a market is going to sell off significantly, it's going to be after a failure to hold above the third standard deviation of VWAP. It's also going to happen at a long-term edge in the chart, those types of things. Again, you can see my alert right here for 202. A break there, does it get us back to value? That would be about 190 on a long-term basis. Every time price drops lately, it seems to come back to S1. That's the first standard deviation below VWAP. You can see it hit here and here and here and here. Do we get down to S1? So that's somewhere between, call it 186 and 190, 185 and 190. Again, this is just looking out longer term to see what might be on the horizon if price cannot hold 202. How far do we go? You also notice I have an alert right here at the midpoint of the last couple of days, because if we start pushing through there, perhaps this thing is off to the races to the upside. So again, there's no guarantee we're going to drop through these lows. We have to see how price responds. 202 could be it. And again, how far do we go? I think at the very least 190 would be great. Now I do want to talk about FANG stocks. Here's a look at some FANG stocks, okay? You'll see right here I got a six-way view. This is Amazon, Google, Netflix, Facebook, Apple, and this right here is a composite of those 5 charts. Basically, it's averaging those 5 charts to create this view. And number one, I want to go stock by stock just really quickly. But one of the things I remember here earlier in the year was Google. Let's look at the weekly here. Was it Google? I guess it wasn't Google, so I guess I didn't remember it. And I just killed it. Let's see, GOG. Alright. It was FANG, sorry. This one right here, it was the composite chart. It was this one. And this is earlier in the year, and again, this is a composite chart that averages those 5 companies. And when you look at this chart, again, it's a composite that I create on this platform. You can see that we've had value, which is this blue line, that's VWAP. Ever since October, it's mostly been sloping up. Here's the one few times it closed below it, and boom, pops above. It gets close to it, boom, pops above. It tests it right here. This is when I remember this chart the most. Because after the major sell-off to begin the year, boom, this entire FANG stocks dropped back to its composite VWAP. And in the trading room on that day, we looked at it, and this was a huge red bar, right? We didn't have a tail yet. It was a red bar. And I said, right this moment, the FANG stocks as a composite are at value. And given the trajectory, this is likely a buy on a longer term basis. You can notice that that turned into a major rejection by the end of the week, and a major move to new highs was made very, very quickly. It went from 560 to 700. And then look at the pullback again to VWAP. And again, another buying opportunity off 600. And since then, it has gone to 800. This way of looking at a chart and identifying value is very, very powerful. And that's why I developed it so long ago. And it continues to abide by those concepts that I studied so long ago that just continue to work in the market. These are concepts we use every day in the room. And if you look at this again, right here, let's go to that chart. This is what I'm talking about when price gets outside of R3 and starts to climb. So if this thing's going to break above here and rally, look at how R3 turns up, and then it becomes support, and boom. Then it comes back, boom, and boom. And that's when you know you're in a price discovery phase. You're driving in a price discovery phase away from value. That's an aggressive markup phase. These stocks have been very, very bullish. Where are they now in that process? If you look right here, we're at highs, and we have some room to run just before we even get back to R3, which is now dropping. So we have kind of a pinching phase where we just went from an expansive phase, and now these are pinching just a little bit. That might mean that we're going to come back to the mean a little bit and compress, perhaps. But again, it's always interesting to look at the composite chart in this way, and we're way away from value right now. So nothing really to do on a composite basis from that view. And if you look at Amazon, for example, Amazon looks a lot like that chart. I mean, look at this thing, right? It breaks out here and it just drives, and it's never even really tests R3. It's testing the PIMAs. These have been very, very strong. So you got to continue to look to defend pullbacks in Apple and Amazon. With Facebook, now Facebook here, let's see, this one has an IPO right there. Let's drop that right there. With this one's a little tougher here because I think that this large impulse move that's occurred basically developed in order for this stock to kind of go sideways inside that range for a long time. So if you look at it from a weekly chart perspective, look at the large impulse move from that 150 low to that 220 high. Price pulls back to the mid. That looks like a long-term range setup right there. We just went like this for a long time. I don't know if Facebook gets outside of this range over the next year or year and a half. When I look at this chart, it looks like it has gotten stuck in the mud. Big push down, big rally up. It found the high. It pulls back with a big gap down, and now it is stuck. But I did mention to the group, if price were to pull down and hit this lower edge sometime in the next 3 to 6 months, it could be a great buy. If you can get this thing below 150, I think if you look up 2.5 years from now, it's probably at 300. Again, a double. So I think this has a really good shot to continue much, much higher overall. As long as 150 remains intact, I think we can drop below it, at some point. But I think right now we probably have some of that going on. And look at this. That's 2020. That's 2019. This is the first half of 2018. That's a year and a half. We could easily stay inside that range before something significant happens. So Facebook on a longer term basis is going to be very interesting to see how it plays out. I think you can see the range here in the daily chart is just so significant. With this one, again, they're going to be putting much more wheels toward, toward securing their platform or whatever they're doing with regards to that. And I think that costs lots of money, it costs time, it takes time away from the bottom line and making more money. And I think the stock might be stuck for a little while until that passes over. So that's just some thoughts on Facebook. When a chart breaks down this big, it just makes me want to kind of just hold off for a while and be patient, because if it can be patient for a move back to say 150, it could be very rewarding down the road. So that's one to keep an eye on from a longer term perspective, but right now not the best. Apple through the roof, Amazon through the roof, Facebook, let's see, here's Netflix. Now with Netflix, this one's had a resurgence. It's gotten back above 340. I think the 380 level is very, very important here. Let's go to the different chart over here so you can see a little better. This is NFX. So 380 right here, very, very important. Clear LVN, box above it. If we can start getting above that level, I think this thing works much, much higher. But it would not surprise me if we continue to build out a little bit in here. It kind of had some market structure here, and then it auctioned through there very quickly. Market structure here, and then auction through here. So usually you kind of trade in here for a little bit, but it still has a bullish bias overall. It's been a very strong stock. And there's the Chinese Netflix as well, which was that IQ. That one right there is a lot cheaper. It's $28, and again, this one has had a meteoric rise, almost 16 to 46 in a matter of a few weeks. And the this 24 LVN reminds me a lot of that Roku 30 LVN that we talked about. And right now, if this was 30, it's up here around 65 at the moment, above that high. So if this is 24, does this thing take us to about 48? And this is 24 was our buying entry point. It got very close on this day, failed new low this day, and it popped higher. Here's a retest now off this LVN. Is this all we get right now, or is it going to pull back a little bit more? So if you like Netflix, IQ is one to keep an eye on for a longer term move. I know some of these Chinese stocks have gotten beat up pretty good. This one has a pretty solid LVN to lean on, both at 28 and at 24. Alright, if anyone else has any more suggestions here, I'll take a look at those. Otherwise, we can wrap it up. I did want to look at one more list. So if anybody does have something you want me to take a look at, I'll take a look here. But the other list I want to look at real quickly to see if there's anything there. I'm looking for it here. Is this it? No, maybe not. Ah, there it is. Okay, here we go. Alright, let's see if we have something here on this list. And then once this list is done, we can call it a day here. Basically, this list right here is very similar to that Apple trade, but it's not, you have to kind of qualify them, right? They're not always going to look like this. Basically, we're looking for a narrow pivot range, very narrow, but also we're looking for that pivot range to be inside the last month's range, and that can usually predict some breakout potential for the rest of the month. So that's what these candidates are attempting to find. For example, if we look at this one right here, here's the current month's pivot range, very narrow, and it's inside last month's. It's also in a larger range. This one could have a breakout type of month ahead. Now this one's gone sideways for several months, so I don't know if it's ready to break out now. Why would it break out now? So I'll just keep on going on this one. Here's one narrow pivot range inside last month's. You can see how much it's coiled up. Again, if this one starts to break one way or another, it could be an aggressive move the rest of the month. If this broke to the upside, for example, we could aggressively push to 140 and continue through that pivot, maybe say 145. See what else we have. CLF, COM, Dominion right here. You can see very tightly coiled price action. This is after changing the bias to the upside. This was a major change of bias candidate here before, and you can see it's consolidating here inside range, inside value with the pivot range. Again, this one could be a breakout candidate. I like to pair these with rejection as well, though, so I'm watching for specific signs of things that I want to see. If I don't see it, I'm kind of just passing it by right now. Actually, this one's not too bad right here. This is Lockheed Martin. Lockheed Martin 325 is a key level there. It's been a key level for a while for us. You'll notice here, let's duplicate that one and drop it, say, to 290. So you'll notice with this one that, let's make this 330. We have quite a consolidation in this one on this right side. There was one on the left side, and then we have a market structure below it. Most of you would classify that as an inverted head and shoulders pattern that has a potential to rally back toward recent highs. I would agree with that. It's all about market structure. You know, this one broke market structure to the downside, broke market structure to the downside, and could not do it again. That failed market structure usually leads this thing right back up. Again, this one has inside value relationship here, wide range, very narrow. Today, not quite an outside reversal, but looking pretty strong to start the month. Very tightly coiled price action. Does that lead to a breakout above 330 this month? Because if so, I think it has a good shot to continue toward 360 over the next, say, 4 to 6 weeks. So that one's a pretty decent candidate here to watch out for. Could be a nice breakout candidate down the way. Prudential Financial also doing something very similar as well. You can see this one again, another inside value relationship, very, very compressed here. Rounded bottom-ish. Do we get above 102s? That's where the magic starts to happen, and we could start running, say, back to 112, 114 very easily. Well, anything above 110 could be pretty significant. So, again, a couple of candidates here to watch out for in terms of breakout candidates. Let's see what PSX looks like. All right, not bad. All right, well, I'm going to go ahead and call it a day there. I'd like to say thank you all very much for hanging out with me today. Always great to hang out for these PivotBoss monthly outlooks. Always get some really good candidates over the long term out of these as well. So I'll go ahead and get that recording out to you as soon as possible. Again, thank you very much for hanging out with me, and I look forward to seeing you all soon. Thanks a lot. Take care. I'll see you soon, folks. Take care.